So stuff like phone calls were all recorded for anyone to hear. So whether you were picking up the phone to your missus, it was recorded, and if someone wanted to come and listen to it, they would just type in Johnny Davidson, look at all his phone records and click on the phone recording, and you could just listen to your phone recording.
We like to look back at these successful people that have done well with their lives, who we consider have done well with their lives.
Yeah.
Because again, success is completely subjective. And we look at what shaped them, what moulded them, how they got to it, and so on and so forth. I think it's quite interesting to see. There's patterns, aren't there?
Oh,
Every single person we do, there's always like a trait, you know.
Yeah.
We're going to get into it now. So, we are finding success, and we're here to help break that monotony of your life and help you find your own version of success. Welcome back to another episode, guys, with me, Alex.
and me, Adam. How you doing, mate?
I'm good, man. How are you?
Yeah, very good, thank you. Very good. How was
Good.
your week?
It's a good week.
Yeah.
Smashed it. Again, it's easy to smash it in January because you're just so fixated on doing well. Aren't you? Yeah. It's just keeping the level. You know, I think I'll be right until the first trip away, and then that's when I'm going to have to refocus and get on it again. What about yourself? How's yours?
Yeah, to be fair, mate, it's like the same as you. Like you said, everyone's got the goals and the start of the year that they want to smash, that we just keep pummeling away, and yeah, it's been good so far. So
Mega. All right.
enjoying it.
This week, so still January, still blues, still
It is, yeah.
still sucks a little bit. We're gonna do a success story this week because we haven't done one in a little while, have we?
No.
Who was our last one? Was it the Oracle of Omaha?
I think it was Matt, wasn't it?
Oh, Fraser, yeah, it
Yeah.
was, yeah, across the chamber. Of course it was. Sorry. It's been that long. I can't remember.
Long. It's been about 20 episodes, to be fair.
How many?
20, roughly.
Since the last
Yeah,
one?
yeah.
Blimey. Terrible job. We'll have to keep
On
them up to
top.
date.
Yeah.
Anyway, so this week we're going to talk about someone who's not a household name.
No, he isn't. When he is to us,
Yes.
to the average,
I think unless you're into investing or into...
even finance, I would say.
finance, you'd know of him.
Yeah.
You'd have heard of, if not him, the company.
Yeah.
Other than that, I don't think many people know about it. And that's why we're going to do a little story on it, because we like to look back at these successful people that have done well with their lives, who we consider have done well with their lives.
Yeah.
Because again, success is completely subjective. And we look at what shaped them, what moulded them, how they got to it, and so on and so forth. And I think it's quite interesting to see. There's patterns, aren't there?
Oh,
Every single person we do, there's always like a trait, you know.
Yeah.
We're going to get into it now. So, the man in question this week is Ray Dalio, or Raymond Thomas Dalio.
that is it.
He's an American billionaire investor, but not only investor, so he's a hedge fund manager for a long period of time,
Yeah.
an author, a YouTuber. He's a busy man.
He is.
Does quite a lot.
Philanthropist.
And mentor.
Yeah.
To one famous mentee, old P. Diddy. P. Diddy, Pip, bad boys for life. Boom, boom. Yeah, interesting. I found that fascinating when I realised he was his mentor.
Yeah.
Because he's now worth, as of last year, over $1 billion.
Is he?
So he's doing well for himself. You know, $1 billion is people. It's 1 billion. It doesn't sound like a lot, but that's huge.
999 million
Exactly.
plus one.
You're doing and 1
Yeah.
penny.
Unbelievable.
It's huge.
Yeah.
So getting to billionaire status is no easy feat. It's you're doing something right.
You are.
Nailing it. Anyway, so back on to Ray Dalio, Raymondo. He's most famous for founding and being CEO for a long time of Bridgewater Associates.
Yeah.
Which is an investment firm, or asset management company. I think it's a professional terminology.
Professional name.
Interestingly, it doesn't do it for everyday people. So, like you or I couldn't just sign up and say, "Can you invest my money for me?"
No.
It's like a corporation asset management company.
Yeah.
So, like charities and businesses and so on and so forth, corporations put their trust in him.
Yeah.
And I think maybe that niche has done well for him.
It has, yeah. I've so researching a bit on him and investors that are very wealthy. They only manage a big amount of capital. Whether it's a company or an individual, it's always a big amount of capital. So one guy I looked into, he doesn't manage anything less other than £15 million. So if you come to him with 15 million, fine, I'll manage it. If you don't have 15 million, if you have 14.5, I ain't fussed. I don't want to know. I think he was the same. I think his companies that's come to him with $1 billion for him to get on board. And obviously, I think his fund's worth 150 billion.
Okay.
He's got under management, so it's quite a lot of money. If you've got 150 companies, you know, obviously that he's not going to have 150 companies. He's going to have 10 or whatever.
When you put it like that. Yeah, blimey.
Yeah, 150 billion under management at his firm. That's a big lump of money.
It's large. It's no small little
Exactly.
change, is it?
No.
Don't find that down the back of the sofa.
Apart from mine, obviously.
Obviously. So he started this company back in 1975, and it is now a massive company. It's not public, is it? Private.
It's not.
Still private, yeah.
Still
So
private,
he's doing really well for himself. And yeah, he's managing billions and billions. Where did you said you knew where he started it from? A little apartment, was it?
So, yeah, I mean, we'll go through the whole list, but he started it in a New York 2-bed apartment in Manhattan.
That's it. Okay.
Where he first started the firm.
And he was born in New York, wasn't he? Back in
He was,
49. He's currently 73 years old.
Yeah.
Interesting that his father was a jazz musician.
He was, yeah.
And his mother was a homemaker.
Yeah.
But I'm
I
not.
don't know what a homemaker is. Does
that
it
a
just look
cleaner?
after the kids? But obviously he was an only child.
Okay.
So, I mean, he's basically when he was out earning money
Yeah.
or, working or doing whatever he did as a kid, his mum didn't really have to take care of much, did she? Was it just like the home, as you said, was it a cleaner? Or was
No,
it, is that a smart word for a cleaner? I'm not sure. Let us know if you know what a
Yeah.
homemaker is and you're in America or whatever. Let us know.
It seems like it's an American thing because it's not a thing in the UK, is it? A homemaker.
Well, I've never heard of homemaker in my
No.
life, unless I would call it like a housewife.
Yeah, yeah, that's what it is in the UK.
but-
Mate, what do you reckon that's what it is?
That's what I was thinking. That's what I put two and two together.
What,
but
jazz musician and a homemaker? We're able to, well, who knows? We speculate. Yeah, please, American listeners, please get in touch. Tell us what homemaker is.
Yeah.
I'm going to go real early life.
Go on. Yeah, we're like
talk
it.
about his
We like
first
the early
stock, because we did it with the Oracle of Omaha, didn't we? Remember talking about his first stock? He was 10 or something when he
Yeah.
bought it, and I can't quite remember now off the top of my head how he did it, but he was 10 years old, and he'd been exposed to that because his father was into it as well.
Exactly, yeah.
Ray was a caddy at a local golf club for some, obviously, wealthy people play golf because it's quite
Yeah.
expensive to do.
The Lynx Golf Club, by the way.
Say again?
The Lynx.
What does that mean?
That's where he played. That's where he was a caddy at.
Oh, really?
Club's still going today.
Was it?
Yeah.
Is it in New York?
Yeah, just outside. It's a nice place.
So he was caddying for these gentlemen, and obviously, as you talk about work and finances and stuff like that when you're on the golf course.
Yeah.
And these guys were in the industry. They're talking about stocks, and it was at a time where the stock market was doing really well.
Yeah,
It was-
booming.
Yeah. So everyone, it was like the topic of conversation, and obviously he was just exposed to these conversations for literally full weekends at a time, and ended up buying his first stock at about 12 years old.
That's it, yeah.
It was in like Northeast Airlines or something like
Yeah.
that, some sort of airline company, and he bought it because it was under $5 or something like that per share.
Was it? Okay.
It was something silly. He was
Right.
like, he couldn't afford the other one, so he just bought it because it was under $5. But still managed to triple his money on it because they
Yeah.
like, got bought out, something like that. When
yeah, 3x it.
yeah. So he's done really well on his first stock, and that bit him, and he got the bug, and
That was it.
look at him today,
Yeah.
multi-billionaire. Whoa,
Whoa.
whoa, it's impressive. Why are you laughing at?
No, just your face. Yeah, so as you said, it tripled after he first bought it. And like you said, at that time, I think he was just going into high school when he fully sort of started looking into investing and got really involved in it. And that's when he started fully researching into it, getting involved in the world, getting involved in the life of what an investor, what a stockbroker could mean to him. And he went to, I think it was, what do they call it over there? It's not, is it uni? Or is it high school?
They call it college.
College.
University
They went
is
to
college over there, I think,
at,
yeah.
Long Island.
Okay.
And then also went to business school at Harvard as well in 73. Finished in 73.
He went to business school at Harvard.
Yeah. Smart guy.
Mm.
And then after graduating, this is where it gets a bit loose. I mean, the research, some people have this, some people have the other way. So apparently he started into full-time stockbrokering with futures and commodities and then got married. Other people say he got married first and then went to do that. I don't know. There's two conflicting stories
interesting,
here.
okay.
So I'll let you do what you want to do or how you think it is. Personally, I think he got married first.
From the research.
That's right. Yeah. He actually, when he first started as well, he moved to Connecticut with his wife, and they lived out a converted barn, which he traded out of as well.
No way.
Yeah. So that was his sort of like his first little. Whilst working on the trading floor in New York, he was also doing that on the side as well.
Interesting. He liked it. He was committed.
Mate, the bloke. So we always say that if you want something to happen in life, you surround yourself. Then you surround yourself with what you want to happen. So if you want to be the best cyclist in the world, You wake up next to your bike, you get on your bike and you just ride. And all you think about, all you dream about, all you live about is that one thing. It's the same with him. Obviously, if he woke up every day, walking out the door, right, and straight into his office, I'm going to be a stockbroker. Go to New York, I'm going to be a stockbroker. Come home, continue doing stocks, and then go to bed. He lived it, he breathed it. Very, very simple. And obviously, it paid off for him.
Massively.
So yeah, that's where he traded commodities and futures. I think it was what he first started out, and he wasn't actually trading individual stocks.
Okay.
And then he worked at a company called Dimmock and Dimmock.
What do they do at Dimmock and Dimmock?
I've not a clue. I'm going to guess
Something to do with trading.
Trading and investment. Yeah, I think they were a company that were on the Wall Street side of things, and they were just doing futures and commodities. And eventually, I think he got a promotion to director at that company as well. So I think he was only very, very young. Maybe, I mean, this is 73, 74. So do the maths on that.
Just before he started Bridgewater then?
Exactly.
So he was right on the cusp, okay.
He had a disagreement with his... So this is a little bit later. He had a disagreement with one of his... so he changed jobs at this point. And Ray, in his younger age, is known to be a bit of a hard goer. If he thinks that something is right, then it's right. And his director of his company that he switched to told... again, the story's a bit closed. It's not quite true. I don't know. It's a bit left in the dark. It's like a cliffhanger. But basically, he had an argument with his director after a Christmas party. And I think he was quite drunk at the time. And Ray was like, do you know what? I don't like you. So he just punched him in the face. Punched his director straight in the face. And I think that is when he got sacked. And I guess that was end of 74.
Interesting.
Just before he started Bridgewater.
So was the sacking, do you think, that he was like, right, I've got nothing else to do, let's do this?
I think so. And obviously he had a big following this time. A lot of people were following where he went. So when he left... it was Dominic and Dominic. Not Dimmock. Sorry. Dominic and Dominic. When he left... I'm really going to Charlie Dimmock. When he left that company and moved to the other trading firm that he was working for, Hayden Stone, then he sort of realised that he had a big following. People were selling their businesses with them and following him. Okay. So he was very, very well known in that.
Wow, he
futures and commodities. Exactly. Very, very early on in his career. You know, he's only been doing it he graduated in 73. He's only been doing it for a year and a half.
Jeez.
And he already had a big following. So when he first started up Bridgewater, he already had a load of clients coming from those two companies and going, right, we want to go you because we know what you're like. We understand what you do and how you can make us profit. So we're not going to mess around. We're just going to go straight to you.
Yeah.
And that's what they did. And recently I've been reading The Intelligent Investor, and it seems that a lot of people would go to a fund for the manager. When the manager would leave, all the clients would sell out and follow the manager.
No way.
Yeah, so it's very, very, very common thing to do. However, majority of managers that leave and go to start their own funds find it quite hard and almost go broke in the first or second year.
Ooh.
So he was obviously a very one of those people that didn't happen to him.
Yeah,
he hit the ground running and it played into his hands, obviously.
Evidently.
But yeah,
fascinating. Okay. So he came from he got sacked, which is quite. A lot of people get sacked. A lot of people think it ruins their lives and so on and so forth.
Yeah.
And actually, sometimes it can be the best thing that ever happens to you.
Do you know what Bridgewater first started out as? It was a wealth advisory firm.
Okay.
I'm not sure, again, what that translates into, whether they were just advising people how to spend their money or how to invest their money smartly. Again, because he was doing fund management on the side as well as running Bridgewater, I think he had those clients come to him and they were just following him, and Bridgewater itself was just
became an investment asset management company. Like
exactly.
That. Yeah, no, I can see that happening. That's quite common. Like he if he's got a following like that so early on, he knows what he's doing. You would start a financial advice company, wouldn't you? Yeah. And those people were like, right, stop telling me, just do it for yourself. I'm paying you to do it now. And
it's like, well, okay, if I must, and he obviously found a niche there that people were willing to pay him quite grossly.
Yeah.
And then, probably about 2 years later, or 3 years later, going into finding that people were very, very confident in what he was doing, and he started generating a quite big following. He started writing a daily observation letter where people would, I think it was, maybe you received it, I'm not sure, but he would write things that he was looking out for in the markets that people necessarily didn't have the capital to invest with him, but were interested in his philosophy and interested, right, okay, this guy's really good. I want to know what he's thinking. I want to know what he's looking at. And he started doing that and generating that almost like a newsletter today.
Yeah,
and he would send that out. Yeah. And that was early, again, it's quite hard to find information on, but I think it was early 80s, maybe, late 80s, where that started coming out. And it started becoming a thing where he was just reeling that off. And obviously, again, it helped him because people were really wanting to get involved around Ray. And again, his following just grew and grew and grew. And the name become bigger in Wall Street.
Yeah, massively.
And in 2005, the next thing I found, Bridgewater became the largest hedge fund. So you can then just go to see how big. Obviously, it survived the dot-com bubble. It survived, all the other years in the stock market. In 2005, it became the biggest hedge fund.
So he is known nowadays as like Mr. Diversified, isn't he?
He is.
If you listen to his portfolios, he pushes gold, commodities, stocks and shares, but Mr. Diverse. Like he will not have one massive holding of anything, and maybe that philosophy got him through those tough times, the dot-com bubble.
Absolutely.
And got him through the housing crash in 2008 and so on and so forth, this COVID as well. Because the company's still going strong.
Yeah.
I think it's still one of the biggest asset management firms in the world.
Absolutely.
So maybe there is something to be told about the diversification.
So I've done a bit of research on this. He calls it the all-weather portfolio.
That's it, yeah.
And obviously you have to be involved in his company to have investments in it because he's never going to release what the all-weather portfolio is. It's not going to happen.
No.
The man, as much as himself, has done all the research and all the time into these companies and the commodities and the futures and the gold and silver and whatever. He's never just going to release it. So, however, in Tony Robbins' Money
Master
the Game book, he does go briefly into a description. Now, we talk about being heavily involved around in stocks. Ray, again, as we said, is more of a conservative investor. He was a bit older at the time. He had a lot of money under management, and with people that are investing £1 billion, they want to know that their money is going to be secure. So this guy only put 40%, roughly, around in stocks. The rest were in bonds, commodities, and futures. Stuff like gold, stuff like water, stuff like oil. That kind of stuff is what he was investing in, plus bonds.
Yep.
As we know, it's not really interesting for us. I don't find it very appealing.
No.
I do have some spare money that is in that kind of setup in that portfolio.
Some small diverse.
Exactly. But apart from that, it's I don't find it very exciting.
So the thing is, I was speaking to I don't think he's a fund manager, but he manages. He's at JP Morgan and he invests for them for very high profile clients, and they just want to see their money going up. They hate seeing it drop.
Yeah.
So if the market drops 25%, they are on the phone straight away. What's my money doing?
Yeah.
And if he says, "Yeah, you're at 25%," he's like, "Well, I could get that out of the market doing my own thing. I'm paying you to make sure I don't drop that much. I want to be here in 20%, 15%," and that's when he's doing the right job.
Yeah.
So I think that's right. When people are investing £1 billion, they want to see some sort of growth, and the safest is to diversify it.
Exactly.
So when half your portfolio drops, the other
carries on.
Yeah, skyrockets. Yeah. So you sort of hedging your own bets with that diversification. And we're heavy in stocks purely because we're of the mindset that we're happy for it to drop for 2 years, 3 years.
Yeah.
We're not desperate for it now. That's why we're able to do such a thing.
Exactly.
Whereas those billionaires, they sort of just want results now.
And again, the difference is that we're coming up to that status.
Absolutely.
The millionaires and billionaires are at that status.
Yeah.
So they've already had their
Risky,
risks.
yeah.
Exactly. Whereas, yes, okay, ours is technically not very risky at all, but to us it's very low risk. But to them, because it's £1 billion and maybe that's a fifth of their portfolio or their assets, it's going to be quite a big chunk of money. So that's why it's a bit different for us.
Definitely.
So I think 2007, 2008, 2009, his company did not lose a single year. However, 1991 to 2005, it had 3 consecutive losses in years. So that period of time, his firm lost, in percentage-wise, 3 years. Which actually...
What do you mean, sorry?
So from 1991 to 2005, he saw a decline 3 times over the course of that time. In 3 years, 3 consecutive years.
Is it like in returns?
Yeah,
Okay.
exactly. Yeah.
A loss every. Okay.
Yeah, for 3 years.
Okay.
Realistically, that's nothing.
No.
You know, over the course
that's
of how long is that? 14 years?
We'll say 91.
Yeah.
Yeah. Jesus. Yeah. 14.
It's nothing.
Yeah.
3 years out of the 11. 11 winning years.
Amazing.
Unbelievable.
Yeah.
And yeah, so again, he just kept pulling that. And I think the top sort of fund that you can go is, I think it's called the Pure Alpha Fund, which is, again, I think one step better than the all-weather that we see and know of today.
Interesting.
And again, he hired quite a few big names and managers in that fund, and they actually came under quite a lot of scrutiny from workers there. So stuff like phone calls were all recorded for anyone to hear. So whether you were picking up the phone to your missus, it was recorded, and if someone wanted to come and listen to it, they would just type in Johnny Davidson, look at all his phone records and click on the phone recording, and you could just listen to your phone recording. If you made a mistake, it was publicly known inside the company. So if you had you bought a company and they were, you misread something on the balance sheet or it was false information, and they realised that, and the company dropped off the face of the earth, they would publicly, or inside the company...
There'd be a notification inside the...
Well, no, they come over the PA system and let the person and the rest of the company know Johnny Davidson is up.
No.
Because he'd done this and missed this, yeah. So a lot of people that you found started to leave that company because the sort of turnaround was 2-3 years. From person to person, staff, because people just couldn't take that
stress.
The stress, exactly. At the same time, I think it's actually quite smart, because if you're the person that's willing to learn from their mistakes, you stay there because you'll happily, yes, okay, I messed up, I'm really sorry, hold my hands up, I won't do it again.
Yeah.
And he didn't sack the person. It was just publicly known.
Yeah.
Whereas people that are so susceptible to being called out on, that's when they can't take it. When the people that don't want to learn, when the people that don't want to find out what they've done wrong, they just
their egos.
Exactly, they don't want to know that. And I think a lot of people on Wall Street have that ego that they don't want to find out that they are wrong. Whereas people like me and you, we have to know that we are wrong so we can change our ways and
we learn
make
more from
ourselves
our
better.
Mistakes.
Than we do. Exactly.
Get it right. I love that. Do you know, it's grown on me. I quite like that. It's
amazing.
brutal, but I like it.
It is, yeah.
Because you're right, you'll find the people that have the right mindset and are going to do well will stay.
Yeah.
And those egotistical knobs, they'll get gone.
Exactly.
Fascinating. It's brutal, but I love it.
It is, and so it came under quite a lot of scrutiny. It was in Bloomberg and stuff for a long period of time, during the late teens, that his company was just so harsh on staff, and obviously staff are coming out saying, he publicly humiliated me. He didn't, he was just trying to do the best for you, and at the same time you couldn't realise that.
Brilliant.
And you look at the guy, Ray Dalio, when he talks, he's such just a normal guy, but you think of that and you think, Ray Dalio, really? He's not going to do that, is he?
Is he cool, calm and collected on the TV? Or
you don't know, do you?
Behind a closed door, he's
animal. Yeah. But I love that. I love that. I think it's amazing.
That's a bit of a philosophy we want to give people, isn't it?
Yes.
You need to be a warrior. It's better to be a warrior in a garden than a gardener in a war.
Yeah.
Be an absolute animal, but full control.
Exactly.
Powerful man. I'm not sure about them phone calls though. Recording all your phone calls. I mean, I'll never have anything to hide, but it's just say you just talk about to your wife. You're in a bit of a sticky situation with your wife. All your friends could be listening to that conversation, and know what situation you're in with your wife.
I mean, realistically, because this was obviously late thousands, early tens, you'd have a phone call at the time, so you can use your mobile. Okay. It wasn't just like Doris called me up on the phone because obviously I got no one else to call.
It's all business.
It is, yeah. And obviously, again, if you're approaching a client trying to sell them a product and they can see that you've messed up the sales approach, or you've messed up a wording, or you said the wrong word, or you said the F word or the B word or anything, they can go, right, well, this is why you didn't get the sale. Sort it out. Do you know what I mean? This is not up to scratch. You're not supposed to do this. You know how it is. You've got a load of money under management. Don't do this. So again, it's just another way to improve. Improve the thing.
Fascinating.
Unbelievable. He had a bit of a downturn in, I think it was 2009, whereas he expected the economic growth to not be as big as what it was. So obviously just coming out of that year where we struggled, where the world struggled.
The housing crash.
Yeah. The Dow Jones returned 19% on that year. Because obviously his pure alpha fund was heavily diverse, it only returned 2 to 4%. So again, his investors were calling up saying, what are you going on? I'm only returning 4%, whereas the Dow's at 19. What's going on? Again, they want to know. They want the best return ever, and obviously, because you're diverse, you can't necessarily.
No, yeah, you hinder your chances. But
4% on £1 billion, I'm not going to complain.
No, absolutely. Well, but imagine if they had just put it all in the market themselves. 19% on £1 billion is it's a life-changing amount of money. Like,
exactly.
You know what I mean?
What you have to remember is. Going back through the last 2 years, if they did put it into the stock market, how long would it take to recover?
Yes, very good point.
So they again, people that are very wealthy, they want the best product going.
Yep.
And they're happy when it's returning 2-3% when everyone else has fallen off the face of the earth, lost 80. But now that the high chance is 19%, they're like, well, what are you doing? Sort it out.
Yeah, why didn't you put my money there?
Exactly. And then, he sort of sat out his fund. Yeah, exactly. He sort of sat out and he's only recently stepped down from being...
Chairman.
Yeah, he's still on the board.
Yeah.
And he's still involved, and he always said that he would be involved till the day dies, which is mega. I think, I think you have to be.
Yeah, it's his baby.
Yeah.
He literally started that at 75, and he's grown it to the mammoth it is.
Yeah.
I think he's doing a great job of stepping down. Like when I think he was 16, 17, he stepped down from CEO.
Yeah.
To just chairman, and now he's stepping down from chairman because he is getting old. 73 or something.
73
like that.
now,
He's getting old to be pushing on, having such responsibility. It's time to give it to the next generation.
Yeah.
And let them take it on from there. Because I guarantee he's got a sick team.
Yeah, absolutely.
He'd have had them. He'd have been their mentors for a number of years, and they'd be like mini hymns, I'd imagine, but with like current generation thoughts.
Exactly.
So it's
unbelievable.
He's a wise move, I think.
And as you said, he's heavily involved around philanthropy. He's got 5 kids, I think it is. 4 kids. One died in a car crash, 2020.
Oh wow.
And the rest are sort of just doing their own thing, living lives. I don't think any of them are actually investors or traders.
Really?
But they're heavily evolved around giving back to the community, giving back to the world.
Oh, lovely.
So he is on the same thing as Warren Buffett, whereas he would give half of his wealth to charities and stuff when he dies. So he's currently worth $16 billion.
Is he? Yeah. It's not something to be sniffed at, is it? 16 billion.
8 billion he's going to give it away.
Wow.
Crazy. So he's a very, very smart guy.
He is.
And he's also a great author of 3 great books.
No, I think it's 4. He's got 4.
Is it 4?
He did Principles twice. Once the original 2005, and he rewrote it much more recently.
Yeah.
Again, so it's 4 books.
Great.
But Principles is good. What's the
Changing World Order.
Changing World Order. Fascinating. Very interesting. If you don't want to read the books, his YouTube channel
Unreal.
is really good. It's little short animated. Most of it is short animated series, and so informative in such a short period of time. It does just make you get thinking. It's really good. I'd highly recommend it. In fact, I'll put a link below to his YouTube because
go and give it a watch. Go and give it a watch. So that's Ray Dalio's life basically. It's he's done an amazing thing starting from where he did. A little 12-year-old kid that was just caddying for some very, very wealthy people on Wall Street to being who he is today, 73, 150 billion under.
And that's one of the common things that we see across the board of all these successful people, exposed to it young, whether it be sports or investing. Like Warren Buffett was exposed early, Matt Fraser was exposed to sports, parents both athletes. Who's the other lad we did it? Bill Gates, exposed early to computers and so on and so forth.
And reading, just books.
Addicted to computers. You've almost got to use that as your foundation. What did you love doing as a kid? That's like ingrained in you, and follow that. And they never seem to. Everyone we do this on never seems to have a problem doing that.
No,
because it's so ingrained in them.
Exactly, and they just stick at it, and they live as we said just early on in his life, lived and breathed it. They woke up to it, went to bed to it,
and they all have setbacks. All of them have been sacked or had a really tough time, like went back to zero basically, or like broken backs, stuff that puts them out the game. And yet they still come back stronger.
Exactly. So
even if you're having like a really bad year, or last year was a horrific year for you, just think to yourself, actually, this could be the leapfrog that I need to traject myself up and nail 2023.
I know what doesn't work now.
Yeah.
I know what I can't do, but I know what I can do.
Spot.
So let's use those.
Yeah. And that's all they've done their entire lives. So we need to start implementing that into our lives. be able to pull off the same sort of job.
Absolutely. Anything else to add?
No, I'm good.
Facebook, Instagram, Twitter, links will be down below. Don't forget to rate, subscribe, and share this podcast. We hope you all enjoyed it, and take care. See you later.
Success is available for everybody, so why should you settle for less?